But as promised, Birla Corp, that's the next management on the show. Remember, the stock is down more than 15% in 2025 so far. Jefferies remains constructive on the cement sector, but they highlight that in the near term, there could be some kind of disappointment. To discuss this, pricing trends post the GST cuts, we're joined by Mr. Aditya Saraogi, the CFO of Birla Corp. Hi, Mr. Saraogi. Good to have you on the show, sir. Just going to highlight three main points that we'll be looking at and touching upon: demand and pricing outlook, the guidance for FY26, and as well as what is the capacity addition plan for Birla Corp. Mr. Saraogi, let's address the first problem with regard to demand. How has demand been on ground in Q3 so far, post the Bihar election getting out of the way? And in the first half of the year, I think you grew by close to around 8%. What do you intend to end FY26 with in terms of a volume growth?
Yeah. Thank you, Nigel, for having me on the show. Good morning. The demand has been quite sluggish in October and November. Usually, we see that after the festivals of Jute and Diwali, there is a pickup in demand, but that trend has been elusive so far in this quarter. But in the month of December, we are seeing some green shoots in some of the markets. And we expect the demand to start picking up in the next fortnight or so.
Mr. Saraogi, what would that mean in terms of ending the year with? Some on the street are saying the cement industry is just kicking the can down the road. Every year, you're hoping for a better next year. The GST cut as well came about, but still, demand is still not as strong as what is expected. For your company, what do you expect to grow? 5 to 8% was a broad range you've given us in the past. If you want to narrow down on that?
Nigel, the broad expectation was that the industry will go in mid-single digit. And we had said that our growth will be in line with the industry. In H1 also, we grew at 7%, which was in line with the industry. But my own sense is that at least in third quarter, the growth of the industry will be flattish to low single digit because of the subdued demand. And our growth might actually lag the industry slightly because we have consciously stayed away from non-trade segment where the prices continue to be quite depressed.
Okay.
So we are not chasing volumes at the cost of profitability.
So then you'll end the year with close to around 4-5% volume growth. Would that be a fair estimate?
It could be flattish to low single digits is what I can probably suggest at this point of time.
Okay, flattish to low single digit for the year in terms of a volume growth. So you're bracing?
In H2, not for the year, in H2.
In H2. Yeah. So then for the year, it will still be close to around 5%. 4-5%.
Yeah.
Got it. All right. So second half of the year appears to be a bit of a challenge in terms of demand then. Tell us about pricing. Post the GST cut, I believe most manufacturers, they passed on most of the price hikes. What is your, what happened for Birla Corp in terms of pricing in the various states that you all do function?
So the pricing, again, because of subdued demand, the pricing has also been soft. So compared to last quarter, on a sequential basis, we find there's generally a drop of around 2% on an overall basis. And my sense is that should be the trend. 2 to 3% is a drop, I would sense, for the industry as a whole.
So pricing is down, demand is soft as well. Then what does it mean in terms of profitability? In the first half of the year, you did around 715 rupees of an EBITDA per ton. So for the second half of the year, what would it be and what is the suitable range?
See, Nigel, rather than guessing on the EBITDA per ton, I would say that the EBITDA in absolute terms, usually it is better in second half. This year also our expectation is that the trend should continue despite the softness in demand and pricing in the third quarter, because we expect reasonable pickup both in terms of volumes as well as realizations in the fourth quarter. So that should translate into a better profit in terms of EBITDA for H2 compared to H1.
Going by what you're saying, sir, quarter 3 is likely to be a bit of a very weak quarter or a washout quarter, and you're optimistic about quarter 4. Would that be a fair assessment?
Weak because again the base effect was also low. So on a Y-on-Y basis, I mean in terms of profit, could be range bound. But Q4 again, we expect on a sequential basis, we expect to be a decent pickup in profit.
Okay, all right. EBITDA per ton will be better in the second half of the year in comparison to the first half of the year because quarter 4 will help in terms of profitability. Got that. Wanted to ask you about the jute business, the smaller part of the business. And every time I've asked you, Mr. Saraogi, why not you sell that jute business? And you have said, no, it's looking up. And in fact, this year, the first half of the year has been pretty good. Revenues are 250 crores and EBIT is positive as well. Seeing similar trend going ahead, and for the year, what kind of a revenue number can you clock?
Actually, Nigel, jute, the raw jute prices are hitting the roof. So that is actually, at least in the near term, that is clouding the prospect of that business. So as price gets passed through the consumers and the government has not proportionately increased the price of the bag. So in the near term, that business is in a bit of a fix. But structurally, we are taking a lot of measures which should help us increase the profit of that business going ahead.
So for the year, you think you can do around 500 crores of revenue from the jute business and continue to remain EBIT positive?
Revenue should be possible. Profit will depend on the raw jute prices.
Okay, all right. Let's wind this down then in terms of your capacity addition plans. You know, at times like these, some smaller players will be in bigger trouble than the larger players. And you have fairly good size right now. Would you look at inorganic growth? What is the targeted capacity addition plan? And the debt number, net debt, I think it was 2,400 crores. Where is that one headed?
So in terms of capacity addition, we have announced that our capacity is slated to go up to 27.6 million tons from the current level of 20 million tons by FY29. So we are maintaining that. In terms of inorganic growth, since we are already embarked on the organic expansion, as of now, we don't have any intent of any inorganic expansion. In terms of net debt number, we expect to definitely close below 3,000 crores by the end of this year.
Below 3,000 crores. But you're already, sir, at those levels. You're saying despite the capex, you'll still end below 3,000 crores. I think the last accounted number was around 2,500 crores.
Yeah, so this year we will end below 3,000 crores.
Got it. Appreciate you joining in, Mr. Saraogi. Hoping for better times in quarter 4, but it's, I think, pretty clear the writing is on the wall with regard to the feedback that I get as well. And you're echoing that quarter 3 actually is going to be a very, very weak quarter for cement demand. Thanks a lot for joining in. Let's remain optimistic about quarter 4.